Semler Scientific is listed on the Magic Formula website. And if you want to learn more about the Magic Formula, then the video about it is right here. But to simplify it as much as I can, if it's on the Magic Formula list, then there is a serious chance that this is a good company at an attractive price. So let's analyze it, value it, and see, is it really a good investment opportunity? But before we start, I just wanted to thank all the patrons of this channel, not only for supporting it, but also for giving me ideas for certain videos, for example, this one. So thank you so much. Semler Scientific is a company that provides technology solutions to improve the clinical effectiveness and efficiency of healthcare providers. Currently, they have three main products. One of them helps evaluate patients for risk of heart attack and strokes. They have also a glycemic management software program designed to provide insulin dosing recommendations. And they created a test for detection of Alzheimer's disease. So some very useful products. Okay, so let's look at the recent results. Revenue went up by 29.9% year over year. Net income went up by an incredible 47.9%. Cash and cash equivalents went down by 77%, and they have no debt. So really some solid results. Okay, let's take a look at the big picture. Individual insiders, that is a check at 22.5% of the company owned by individual insiders. And we would like to see this number over 2%. So that is a very encouraging result. We know that people running this company will take good care of the shareholders because they are the shareholders as well. Now, it may be worth noting that the company is currently in the process of finding a new CEO. So they are in a transition state when it comes to the management. And are individual insiders buying? That is an X. We see no action here at all. And do super investors own this company? That is an X. Not a single super investor is currently owning shares of Semler Scientific. And one of the reasons may be the fact that it is a small company with a market cap of just over $170 million. And of course, they are not buying currently either. Return on invested capital. That is a check at 55.5% 10-year median returns. And we want to see this number higher than 10%. So that is absolutely an incredible result. But let's remember that they will change the CEO, so the past results may change dramatically. And free cash flow growth? That is a check at 39% 4-year growth rate. Now, usually we look at the 10-year growth rate, but in this case, Semler Scientific is profitable only for the last 4 years. Before that, they were reporting a loss. So even though this result is great, we have to be a little bit more cautious here. And what do we know about net profit margin? It is a check at 26.2%, and that is quite exceptional because the industry average is just 7%. So they have a massive advantage over their competitors. And now let's take a look at share buyback. It is an X. They issued 37% new shares in the last 10 years. So unfortunately, long-term investors are getting diluted. And the debt? It is a check. This company has no debt for the last 5 years. So basically, when they became profitable, they paid all the debt, which seems really wise and makes it a much safer investment. It is all an X because they are not currently paying any dividends. And for a company that is so small and that has a lot of opportunities to expand, it is probably a wise thing to do. Instead of paying the dividends, they can invest that money into the growth of the company. Its current price to earnings ratio is 12.7, so it's not high, but also not exceptionally low either. So now let's value this company using a discounted cash flow formula. We will have to estimate the growth of Semler Scientific for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. So in the low scenario, we will estimate a growth of 8% and then 5%. In the medium, 12% for the first 5 years and then 10%. And in the high scenario, 15% and then 12% growth. Now, why did I choose such growth rates? Well, let's look at the historical results of this company. Revenue went up by 47.1% in the last 10 years. Free cash flow went up by 39% in the last 4 years, before that it was negative, and earnings per share went up by 28% in the last 4 years. And here we look only at the last 4 years because before that they were reporting a loss. And my estimates are much lower because the company is profitable only for the last 4 years. So we don't have a long history of great performance. And that is why I want to be more conservative than usually. So with such estimates, the intrinsic value in the low scenario is $37, in the medium $51, and in the high scenario $62. But we have to always add a margin of safety to those prices. I use a 30% one because I want to give myself the room for mistakes. And with such a margin we get in the low scenario $26, in the medium $36, and in the high scenario $43. And the current price is around $26 per share. So it is all in the green. That is very encouraging. Even with low estimates and the margin of safety, it looks like this company is really nicely priced at the moment. So we have a company that is listed on the Magic Formula, that has some great results in the past 4 years, has no debt, and that is owned in a very substantial way by insiders. And on top of that, it is cheap. So please let me know in the comments if I am missing anything important in this analysis, because at the first glance, it looks interesting. But remember to always do your own due diligence before making any investment decisions. Thanks for watching and see you in the next one.